Okay, welcome back. So you got the market, which is down, off the highs by a lot actually. So it got into flat territory for a while now. Let's focus on the next management. MGL, that is Mahanagar Gas, reported second quarter earnings, largely above street expectations. Growth's been led by lower gas costs and volumes have also surged both on a year-on-year and a sequential basis. Mr. Ashu Shinghal is Managing Director at MGL. He's joining us right now to take some questions. So good morning, good to have you with us here. You know, we'll get to the second quarter performance, numbers, etc. in a bit. But what actually has been the big focal point has been what has happened in Delhi with regards to policy on the EV side. And a lot of investors have extrapolated what's happened in Delhi to saying, well, something similar is going to happen in other states as well. In Maharashtra, for example. There is, of course, a draft EV policy in Maharashtra. There are analysts who track your company who says that if that were to be implemented if the draft were to become law, it would hit your volumes by about 12 to 15% or so. Could you tell us where that draft policy is at right now? Because you would be in touch with, government officials, bureaucrats. What's going on there, sir?
See, first coming to your comment about the policy which has come out in the Delhi region, NCR, and secondly about the draft policy which is in the Maharashtra. So NCR is a different market and Maharashtra is a more open market. NCR is more policy-driven market. So they are slightly different because most of the policy-driven initiatives are more stringent in NCR as compared to Mumbai. Mumbai is more commercially driven market based on economics. The draft policy of Maharashtra, if I am correct, I'm not very clear on that, but in 2019, they have prepared the draft policy and it is yet to be, accepted by the government in Maharashtra. So it is still in the draft stage, as far as I understand.
Has there been any movement, though, Mr. Shinghal, on that or no? Obviously not, right?
Not very much aware about it.
And you don't think it'll come up anytime soon? That is your best case reading.
It can come, but as you said, that some analysts have given a number of 10 to 15% impact on our volumes. But the numbers which we have in our knowledge about the draft policy is that it is much lower as compared to the targets which have been given by the policy in Delhi. So maybe by 2030, it is around 25 to 50%. In this range, it is gradually going to increase in a gradual manner, whereas the policy in Delhi speaks about 100% conversion of new vehicles, sale of EVs by 2030. So Maharashtra policy is on a lower side as far as the targets are concerned, which is again a draft side. So when it comes, then only we'll be able to see that how it impacts us.
But I think the bigger risk, there is a potential risk to your long-term volume growth, right? Because of this transition that we're seeing to EVs, which is an eventuality. I think that is a big concern that the street has. How do you plan to sort of combat that?
See, I will answer this question in a different manner that, okay, electric vehicles are going to come on the roads. There is no doubt about it. But if you see the data, almost 90% of electric vehicles as of now in India is primarily two-wheelers and three-wheelers. So the segment which is going to impact will be two-wheelers first. And as of now, CNG, there is no CNG vehicles running on two-wheeler side. Three-wheelers also, the offtake of the per vehicle is much less. And as compared to the new avenues which are available for CNG vehicles in the commercial side, the uptake would be much higher as far as that's how we see it. Because more and more CNG stations are coming on highway. So a lot of floating population of commercial heavy vehicles are going to come up, maybe 15 to 18 tons of vehicles, which takes more CNG in one fill. So the upside can come from that side. And electric vehicles in fleet or aggregator, it is around our 20% volume is there, 15 to 20%. So we don't expect that all of it will go back to EVs. Part of it will go to EVs and part of it again will continue running on CNG.
Okay. You were also, you've been talking about diversification, some other acquisitions as well, trying to be a part of the EV value chain. We've spoken about this ad nauseum in the past. Now that this whole electric vehicle adoption is becoming a reality and, it's moving at a very fast pace, can you tell us at MGL's end what kind of diversification, or how can you become a part of sort of this value chain?
It is still being explored. We have not yet taken any firm decision. I mean, as a part of strategy document, we have explored several areas. One of them being electric vehicle value chain or e-mobility. So we are exploring some potential targets, and as and when they mature, we will announce it to the market.
All right. Hi, sir. Good morning. Your volume growth was only around 3% in the second quarter, but you've been talking about 7 to 8% volume growth for this fiscal. Do you hold on to that number? While on the flip side, the EBITDA per SCM, well, it's much higher than what you've been guiding for, that 8 to 10 rupees. Do you want to revise that number upwards?
Yeah, maybe slight correction, not 7 to 8%, but 5 to 6% will be more reasonable. And if you see quarter on quarter, we have grown by 5% in the volume. So we expect that for next 2 quarters also, the volume growth will be maintained at 5 to 6% or 5 to 7%. So on year basis, again, we expect 5 to 6% on the volume side. As
And
far
the
as
EBITDA per SCM?
EBITDA margins are concerned, EBITDA per SCM, we expect, since 2 quarters have gone out very nicely, and we are around 14.5 rupees per SCM. So going forward, the next 2 quarters, if it comes down a bit, so we expect around range of 12 rupees or so. So 10 to 13 rupees would be more appropriate to take EBITDA margins. So slightly upside will be there on EBITDA. But it all depends on the gas prices, because in winters, again, the gas prices are expected to rise. So we never know what is the procurement. Slightly exposure will be there on the procurement side.
And how are LNG prices panning out currently? Any price cuts that you're looking at?
Price cuts, no, we have recently announced 3 rupees CNG price cut on CNG rupees per kg, and 2 rupees per SCM on the PNG side. That was done once HPHT prices were reduced by the government of India from around 10 rupees, $10 per MMBTU to $12 per MMBTU to $9.9 per MMBTU. So part of it, almost all of it was passed, and part of our higher EBITDA margins were also shared with the customer, because the focus is also on to increase the volumes.
So just one number, what percentage of your volumes right now comes from taxis and autos? Would you have that number?
Around 20%, 20% from taxis, and maybe another 15% from autos.
Okay.
Okay.
Got that. Thank you very much, Mr. Shinghal. Appreciate you joining in. And I love that reference that you made right at the beginning, which is, Delhi is business. Delhi is government policy, and Mumbai is...
Delhi is more stringent with the policy-driven initiatives, whereas Mumbai is more economics and commercial-driven. It's called commercial capital.
Absolutely. Yeah. Thank you very much, Mr. Shinghal. Appreciate you joining in, and a great
Thank you.
conversation as always. Guys.